The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 22 March 2019, the famous 322, if you know what I mean. So I think the most important thing on the overall financial markets this week is that there's a plunge in bond yields, and we have an inverted yield curve, which of course pushed bond prices higher and stocks lower. And the falling bond yields reward, of course, the utility sector and is hurting the banking sector. And the last part of the bigger picture is that both the small cap sector and the transportations are showing relative weakness. So with the Fed being backing off their stance and basically being pretty passive at this point in time, the inverted yield curve is inverted even more. We'll be writing more about that in the next issue of the Morgan Report. And moving on, we see a growing list of companies from FedEx to BMW are warning about the world economy. So it's just not yours truly. I'm trying to be a bit humorous here. But key points, executives at FedEx, BMW, UBS, and others are describing bleak macroeconomic conditions, which they say are weighting on business. The head of UBS, it was, quote, one of the worst first quarter environments in recent history, end quote. While FedEx cites slowing international conditions and weaker global trade growth trends. So if we examine this a little further, FedEx is similar in a way to the Baltic Dry Index. Well, Dave, what are you talking about? You're talking about, basically pushing letters back and forth. Of course, FedEx does more than that, but primarily it's information in written form that FedEx does. And the Baltic Dry Index, of course, is hard goods being shipped across the planet. But my analogy is that FedEx is sort of like the pace of business, or you can almost think of it as the velocity of business. The more robust the economy is, the faster the turnover of money, the faster the exchange of ideas, the faster things move. And if things are slowing down, it's, as I've been saying now for months, that we see basically here at the Morgan Report, stagflation, a slowing economy and increasing prices. And that's being not only borne out by yours truly, but again, it's by some of the best in the business. FedEx, one of the best, BMW, one of the best, and UBS. So interesting times ahead, nothing to be overly concerned about, but do be prepared for it. I'll just go a little bit further here. Part of this write-up, global jitters. Fitch ratings are also, quote unquote, quite aggressively cut its 2019 global forecast this week, but the firm's economics team stopped short of calling for a global recession. Well, we are saying there is a global recession regardless. We think it'll begin this year, although the official financial community may not recognize it until 2020. Regardless, there's basically no way out. The inverted yield curve and everything is slowing down, and the uncertainty in the markets. Drilling down on BMW a little more, this is from Zero Hedge. Of course, BMW tumbles as earnings expected, quote unquote, well below last year. In keeping with the misery of the slowing global automotive industry that we have widely covered over the past year, BMW stunned auto bulls this morning when it warned that its earnings will fall well below last year's level. And you can see what happened to the stock. And again, just reiterating slightly what I brought up on that first article. And again, drilling down a little further on that first article, this is from Wolf Richter, Wall Street. Title, what FedEx just said about Europe and China. Quote, Asia volume weakness, which we experienced during peak season, deepened post-Chinese New Year, end quote. When FedEx, a corporate barometer for global goods-based economy, reported earnings this evening, it missed lowered earnings and a revenue expectations, and it cut its guidance for the rest of the year below already lowered expectations, and its shares tanked 5.7% in after-hours trading. So very similar setup to BMW. What can I say? It speaks for itself. The truth of the matter is, Trump train or no Trump train, the truth of the matter is that things are slowing down, things are contracting. It's time to be as debt-free as you possibly can. Probably good to keep some cash and obviously be, prepared for a changing market climate. And moving into gold, this is from a small gold, and he does some really good work. And I did a debate with him, or I should really say a discussion with Lewis. And anyway, this is on his site. Russia central bank gold reserves rose 2,152.36 tons in February. Russia added basically 1 million ounces of gold to reserves in February. Excuse me. Russian gold reserves are the 5th largest central bank holdings in the world. Russia added a record 271 tons of gold reserves in 2018. So you can read the whole article. Obviously, China and Russia continue to accumulate the asset that everyone really knows doesn't fail, especially in economic conditions when they are failing. This is from DW.com, their business write-up. Is the world running out of gold? As the yellow metal hits peak production, experts feel we may have discovered all the world's major gold deposits. So what does it mean for precious metals aficionados and investors? And I've gone through this before. I'm not going to read the whole article, but I'm convinced, and unless there's a huge technological breakthrough, which I'm not going to rule out, like getting gold out of seawater, which is possible, but you're talking about parts per billion, or nanotech or something. But barring any of that, we're basically hit peak gold some time ago, as several of my geologist friends have told me when they started their careers, 30 years ago or so. They would walk over ground that we're now mining. It was like basically worthless because one gram of gold per ton or 2 grams of gold per ton, just ridiculously small amounts. Well, with the improvement in technology, it's worth it barely to do it. So the article you can read for yourself. Basically, what we're all asking is the same thing. Gold discoveries are minimal. What is discovered are usually not very high-end deposits. Now, some that we have in the Morgan Report, in fact, one of our favorites in the mid-tier section is hit the 99.99 on IBD. I'm digressing a bit, but Investors Business Daily has it as the #1 stock right now. And we've been into that stock for quite some time, had it on a rating scale, very top, kept telling people buy, 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 buy. Most of our subscribers did. Not all of them, even though we say, look, this is the highest rated, you should be in the stock. Regardless of whether they followed it or not, the company speaks for itself. So we're happy about that. And that's one of the more, let's say, unusual type of gold situations in the current day. Most of them are producing at cost or somewhere around this level. In other words, the $1,300 per ounce all-in sustaining costs, where there are some, as I just outlined, that are doing much, much better than that. But peak gold, I think, is a reality. Next article up from Bloomberg. Buy gold, sell stocks is, quote, trade of the century, end quote, says one hedge fund. Interesting article. This is a true hedge fund in my view. Hedge fund hedges you against the general economic situation, meaning which is basically basis the stock market, not the Dow, although many people use that. It's basically this S&P 500 for the United States, FTSE in the UK, and different parameters around the globe. But a hedge is just that, and that's, of course, how I look at it. So enough about that. One of last year's best performing hedge funds says, quote, trade of the century, end quote, is to buy gold, sell stocks as risk assets are due for another meltdown. It's only a matter of time until the bearish bet pays off big, according to Crescat Capital LLC. While the Denver-based firm only has $50 million under management, it has a history of outperforming the S&P 500 index, with its global macro fund returning 41% last year alone. Now the investment company says it's time to capitalize on the end of an economic cycle, as indicators warn that a recession is imminent in the coming quarters. Pretty much what I've been saying throughout this whole video. And the last thing I'll speak about this week will be the Basel III in gold, big picture. Basel III basically says that gold will be a Tier 1 asset. It is as good as gold. Isn't that amazing? Mike did a good review of it. I agree with Mike. Many of the members of the Morgan Report, of course, they're allowed to write in 2 questions every month directly and guaranteed to get an answer. Ask the same question, isn't gold going to skyrocket once this takes place? And the answer is, I don't know. But my thoughts are similar to Mike's, that it will have an effect, but it won't be immediate. I think it's going to take some time. This is well known. Of course, the BIS is the Bank of International Settlements, which is the banker's bank, basically the control mechanism for the whole entire structure, really above the Federal Reserve. So this is just putting gold back into the situation where it's really always been, whether or not it's been acknowledged by the powers that be or not. They all know it. And this is basically a tip of the hat saying, yeah, we're acknowledging that gold is basically the best asset you can have. And they put cash in the same category, and the cash means physical cash. So I'm going to end it this week. With that, I wish everyone well. Remember, there is nothing more powerful than the truth. And final plug here, if you're not on our free list, go to themorganreport.com. We do advertise maybe once or twice a week. You can just bypass those if they annoy you. Most don't. Some are worthwhile. Some more people like them. Some don't. If you're inclined to just get this only and just get these weekly updates and not the other interviews that I do during the week, you can certainly just subscribe to the podcast and just get this, again, weekly perspective. It saves you time. I try to keep these things to 10, 15 minutes at the most. I do them every week, bring you the financial news that is the most important from my perspective on the global economy, and I always try to end it with something in the precious metal space. Again, wish you the best, and I'll be with you next week. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.